Thanks so much, Liz. Fantastic. So, as she said, I'm Joy McKnight. I'm editor of The Banker, and I'm pleased to introduce my esteemed guests, Tom Mutton, Director of Central Bank Digital Currency at the Bank of England, and Gilbert Verdian, CEO and founder of Quant, which aims to solve the blockchain interoperability issues. Obviously, we have people in the room, but we also have people watching us virtually. There will be a Q&A at the end of the session, so if you have any pressing questions, make sure that you send them in. And also, you can participate in the discussion and the debate on the social media. Join the conversation with the hashtag #FTCrypto. All right, so let's get into it. Many central banks, 114 according to the Atlantic Council, are experimenting with central bank digital currencies, whether that's retail CBDCs or wholesale CBDCs, as well as piloting the use of CBDCs for cross-border settlement. And some are looking at underpinning this with distributed ledger technology, but not all. 11 jurisdictions have launched a CBDC to date and are testing to see how this plays out in real life. Obviously, Tom, the Bank of England has been doing a lot of experimentation around a digital pound or retail central bank digital currency. So what is the latest in terms of the Bank of England's thinking around this?
So thanks for the invite to be here. So the latest is we released a consultation paper which said we think there's a likely need for a digital pound, but no decision has been taken yet on whether or not to build one. And if we did build one, around the end of the decade would be the earliest point it would be released. We very much see it as a digital banknote, so something for everyday payments. Because it's Bank of England money, it would be risk-free. But you wouldn't have an account with the Bank of England. You would be accessing the services through a private sector provided digital wallet or smart card. It would be unremunerated, it wouldn't pay interest, and it would be private but not anonymous. The reason for that is we think that it's important there is some level of identity information to make sure that there's no opportunities for fraud or financial crime, but none of that identity information would be passed to the Bank of England. And really importantly, cash will be available for as long as people wish to use it. And that's a very firm commitment from both the bank and the government. So the consultation is open. It closes on the 7th of June. We're very much looking for people's views. We very much want this to be a public conversation.
Excellent. And have you had, maybe you don't know this, but have you had many responses so far? And obviously you probably wait until the consultation ends before you're actually reviewing them. But has there been a good response?
Yeah, there's been a lot of responses, and we encourage more, frankly. As we said, we want this to be a conversation. We want it to be a genuinely open consultation. The bank and government will look at it together, and we really do encourage people to send us their thoughts.
Excellent. Gilbert, I was going to pose the next question to you, which is, I think Quant is involved in and is definitely watching a lot of the experimentation that's happening across the world. What are the main issues that central banks are looking at in their experiments?
I think we're in a CBDC catalyst at the moment, and what I mean by that is there's been a lot of policy thinking, a lot of economic thinking to date. And a lot of the next level of thinking is, what does this mean to consumers, what does this mean to businesses, and what does this mean to the economy? And the common theme we're seeing with the work we're doing with central banks is the only way to answer those questions is to practically test it with your local domestic and commercial banks to understand what does this mean. So from our perspective, we're an infrastructure provider. We create the issuance of CBDCs and the interoperability of CBDCs with payment systems. And the common themes are around why a digital pound, why a digital euro, why a digital dollar. And it's an evolution of money, and cash is always going to be there, as Tom was just saying. But having a digital form of cash, a new form of smart money, can really unlock a lot of benefits to consumers and businesses, because we're right now relying on a traditional architecture of push and pull payments, and having logic built in by having the ability to program money to do innovative things is going to really transform how GDP can grow, how businesses can reduce workflows, and how consumers can spend a new form of money. So we're at the beginning of that thinking, but the next step is to practically test it with your local domestic banks.
So experiments are hugely important to us. We've done a bunch already. So we've done 2 with the Bank for International Settlements, who have a London centre, Project Rosalind and Project Meridian. Meridian was focused on housing, just recently been published. Rosalind should be coming out in the next couple of weeks. It's focused on central bank digital currency. I mean, Gilbert has been really important in this. He was a sort of an important participant with Quant providing input. We're also looking at offline payments with Thales and Sample Wallet with Kin and Carter. So these are really important to us. We've got a bunch of these experiments going on. But we've also run tech sprints and workshops alongside with some really important and really major participants actually helping us think about the use cases. So I think those BIS experiments have been hugely important, really valuable, and watch this space for the Rosalind report coming out shortly. But there'll be more in future with our next stage, the design phase of the Digital Pound project, where really experimentation will be at the center of what we do. As I said, we haven't decided to build one yet, but the next stage is about thinking about what are the practicalities of building, and really experimentation is at the heart of that. So I expect this will be a very active space in the next couple of years.
Okay. And you said that the cash will continue. I think a lot of maybe critics of the idea of moving to a digital pound or digital dollar, etc., is really about, is this a solution looking for a problem? What's your opinion on that?
Well, it's a fair challenge. So we have 2 objectives for a digital pound. The first one is thinking about how private innovation can be supported through public infrastructure, and how the digital pound infrastructure might support that sort of private innovation. And the second one is monetary stability, and thinking particularly about the uniformity of money. In doing this, we try to take a long-term view and think about a sort of 10-year future, a 15-year future, where perhaps the world we find today, with cash and cards being a very dominant part of our payments landscape, perhaps that will be different. Perhaps we'll have new forms of digital money, privately provided digital money. And it's against that landscape that we should think about the value of a digital pound. Some commentators have said this was all a reaction to DM, to Facebook, to stablecoins. That's gone away now. Why are you bothering? Well, I mean, frankly, we see a potentially valuable role for a well-regulated payment stablecoin. That's why we're bringing forward legislation and regulation on that. And also to say, well, that thing has gone away, therefore you don't need to think about that in the future. I mean, to me, that feels quite complacent, frankly, and quite short-termist. And also looking to the long term, there are use cases, there are innovations, there are public policy needs for infrastructure, which we can't anticipate now. But it's important that we think about the long term, we play the long game, and we recognize that you can't just create public infrastructure overnight. If you think you need something, you actually have to make that investment some years earlier. And one thing in particular, I think, which is a fair challenge, is people have said, you don't have a persuasive use case, you don't have a persuasive problem you're solving. Well, I think our answer to that is to say it would be quite a strong criticism of our private sector to say you need to look to the central bank to find the spaces for innovation. Actually, that's what the private sector specialises in. What the public sector and the Bank of England specialise in is providing safe money and resilient infrastructure. And that's why we think a public-private partnership is very powerful here, because we can provide the infrastructure, the private sector can provide the use cases, and hopefully it will make sure that we have something which is fit for the future and will support innovation well into the future, particularly as an open piece of infrastructure, which means that innovators, startups can come in and use this infrastructure, provided they're appropriately regulated. And it doesn't mean that just the major players are the ones providing payment services.
Gilbert, do you want to come in on this as
Yeah,
well?
I'd also like to add, there's an opportunity to really solve some of the legacy issues with a new form of money, a new form of infrastructure. And one of those issues is privacy and fraud. There's been a kind of a naive view that central bank digital currencies are for spying on consumers and businesses. We can categorically state the central bank does not care how much people spend on sandwiches. It's not their mission. The central bank is there to govern resilience and to make sure the system is in place. What is happening is the same rules of AML, KYC are going to be applied to central bank currencies as they are today to any other form of money from commercial banks. And the rules that they have to follow will be exactly the same for consumers and businesses and the commercial banks themselves. So from a consumer perspective, you're going to get a better form of protection with a new form of money because privacy is going to be intact in the money itself. And that also allows us to protect fraud before it even happens. Because there's, as we've seen, fraud is an exponentially growing problem. The more we throw money at it and the more solutions we throw at it, the bigger it gets. And we've been battling fraud for decades. But in this new form of technology, we can actually build in fraud and protection at the money, at the network level, so everyone gets the benefit of protection rather than individual banks. And coming from the payment system, it was very difficult to tackle fraud because every bank has their own siloed view of the system. They can see what's coming into their network and leaving their network, but they can't see the holistic fraud. This way, with privacy-enabled CBDCs, your personal data is not going to be on-chain. That's going to be, regulated. And what is going to happen is you're going to have a holistic view of fraud that you can protect against for the first time. So we can really, for the first time, solve the issue of fraud in a new way.
Excellent. Tom, I want to get your thoughts on, from the central bank perspective, in terms of the privacy issue, because, again, that is one of the big criticisms of anything like this going forward.
So the first thing I should say is a digital pound will only work if people have trust and confidence in it. And trust and confidence will only come if they feel that their privacy is respected, that their data is protected. So there is no incentive, there's no reason for us to offer a digital pound, were we to do one, unless it had the very highest standards of privacy. One thing I will say is there is a tendency for privacy and anonymity to become used just interchangeably, and they're not. And we've made a deliberate policy choice not to go for something which is anonymous. Now we'll think about how the consultation plays out, we'll listen to the responses, but we are in a situation where we have very high levels of financial fraud, particularly APP fraud. We have financial crime. We also have issues like losing your cash. That's a problem as well. So we think that there is a positive case for having some level of identity, but we want to hear the public's views about this because, as I said, we've formed a sort of a positive case for thinking that it's important that it's private but not anonymous, but we'll be interested in people's views on that. In terms of having this system which is private, so first thing, very rigorous data protection. Secondly, the Bank of England will not receive any personally identifiable information, so that's really critical. And we also won't initiate any programmability from the Bank of England. So I know there's been some concerns that perhaps government could use programmability to restrict how people spend their money. We won't do that. I went into a coffee shop this weekend and was given a flyer which said no to central bank digital currency. They didn't know that I was involved. One of the claims was that a reason for a central bank digital currency was to eliminate car boot sales, which I can say is not part of our objectives. But we won't be doing programmability. So we think there's a really important use case for the private sector and users with consent to initiate programmability, but we won't be doing it from the Bank of England. And finally, there's some really important feedback we've been given about privacy, but there's also some where I don't think they've fully thought out the argument they're making, which is, I don't really buy into this argument that a digital pound would not respect people's privacy, whereas private sector electronic payments do. all electronic payments create a footprint. They create a data footprint. The question is, who does that data go to, and what are the conditions on the use? And we think we've got a really strong privacy proposition here. But the kind of proposition which is private sector electronic payments are private and ones to a digital pound are not, is in our view a kind of false comparison. And the crypto one, you can make anonymous payments in crypto, but in my view that's a public policy problem and something that should not be allowed to continue into the future. So the kind of, well, you know, there's anonymity in crypto, that's not part of the future for me.
All right, I'm going to ask one more question, and then we're going to open it up to the audience for questions. So the last question I'm going to ask is around interoperability, and maybe Gilbert, I'll pose this question to you first. So interoperability between new forms of money is key to a digital future. Can CBDCs and cryptocurrencies work together?
That's an interesting question. I would say no, because of the definition of regulation between them. A CBDC is central bank money that's been issued by central banks for commercial banks to put onto the actual financial system, whereas cryptocurrencies are most likely not. Can they interoperate? Well, interoperability at a technical level is the ability to move assets between different systems and integrate with existing systems, and that's what we've proven with our technology in the work that we've been doing. So having an interoperable digital pound or digital euro means all the banks can transact it, can use it, and it can be accepted across different payment endpoints, merchants, etc. Having interoperability with a digital pound or digital euro with fiat is the other integration that needs to be done, and that means, can I have my bank accounts with my commercial bank with a savings account and a digital pound or a digital euro, digital dollar account? And what does that mean? And can I spend it the same way? So there's a technical interoperability there. And I think crypto as an asset class, it has its place in the system, and the BIS has the flower which shows where it can fit. But it's going to be a flight to safety. So people are going to trust regulated money and commercial bank money more than crypto money, especially with what's happened in the last 12 months in the industry, compared to crypto, which is a bit speculative. So it will have its place, it will have its use. It may be a form of value, it may be a speculation thing, but when you want to transact and make payments, you will move to tokenized securities, tokenized assets, and tokenized money that is regulated.
And Tom, your thoughts on this?
So we've been very clear that an objective for the digital pound is uniformity of money. That means total interoperability with commercial bank deposits, with cash, and I think also we're one to emerge with a well-regulated payment stablecoin. But that does not mean interoperability with crypto as we find it today, because it doesn't fulfill any of the functions of money, and therefore it will not be part of our interoperability kind of objectives. But a stablecoin, well-regulated payment stablecoin, absolutely would be, if one emerges in the future.
Excellent, okay. In actual fact, we have a bit more extra time on this panel. So I'm going to open up to the floor for questions. Is there any questions? And then I'm not sure if there's questions from the virtual audience, if it's being... Oh, here we go. Here's a question over here. If it's being fed through to the iPad.
My name is Daniel from Off-Chain. So basically, interoperability with Pepe is not on the cards at the moment.
Sorry, interoperability with what?
Well,
it's a meme.
Just a joke. But basically, even with Bitcoin, let's say, or like with the USDC, USDT, or this kind of thing.
No, for two reasons. First of all, it needs to be properly regulated. Secondly, it needs to fulfill the functions of money, in particular stability of value, which it clearly doesn't. So no, we'll interoperate with money. We won't interoperate with investments.
Okay, we have another question right back here first, and then over there second. Yeah, her first.
Hi, I'm Carol House. So I really appreciate the discussion point around privacy and identity in CBDC. This is really the core issue that is that brings a lot of concerns for privacy advocates, and obviously is a huge priority for you. And there's often a conflation of anonymity with privacy, when anonymity is a way to achieve privacy, but typically privacy means there's data that is discoverable under certain protections, permissions, and conditions. So understanding that and knowing that some people feel that CBDCs, if retail implemented, should enable a cash-like offering. What are your thoughts, about the kinds of either technical protections or policy objectives that you're weighing on whether or not there is a way to implement a cash-like equivalent, where there is a way to conduct certain amounts of anonymous transfers? What are you thinking about controls around wallet amounts or deposits or withdrawals, permissioned versus permissionless? Whether for your central bank or that other countries should consider in implementing CBDCs?
Well, I mean, Gilbert should come in on the technology. One of the big debates we had, and I completely agree that privacy and anonymity are used synonymously in a way that they shouldn't be. One of the really big debates we had in launching the digital pound consultation was to think about whether we could call this a digital banknote, because a banknote, as it is at the moment, is anonymous unless you're making a very large transaction. And we thought that it was okay to call it a digital banknote because it kind of captured the spirit of what we were intending to do. But we've always been clear it won't be anonymous. But we are open to hearing feedback. Perhaps at low-level transactions, you could have some level of shielding, some level of anonymity. But as it stands, we're proposing that this would be something that's identified. The key thing, actually, I think, is to say, here's how your data is going to be protected. Because actually, there are a lot of advantages around giving your data to private sector players. I mean, I get all sorts of free services from big techs because I give them my data. The key is I know I'm giving them my data and I understand how it will be used. And actually, perhaps with the digital pound, because we have no commercial incentive to use the information, we won't receive it, and we can set standards for the ecosystem, perhaps we can actually allow people to use their information, should they wish to, but also give them stronger standards of protection. And that's something we'll look at over the next couple of years.
I think the concern is valid. I mean, the ECB had a similar consultation, and the number one thing that came back with was privacy. We're all concerned about privacy. But if you think about 2023, we give more personal data to Google and Facebook and Apple every day than we do to our banks, our commercial banks. So we are already a data-giving society. It's not a new thing as us to comprehend. But the relationship between privacy is going to be held with the commercial banks and the banks that you hold accounts with. They will have an obligation to do the same AML and KYC and identity as they do with traditional money. But when they're transacting CBDCs, your personal data, and we've done tests and experiments with central banks on this, your personal data is not going to say Gilbert Verdian, £10 Pret on chain for everyone else, including the central banks, to see. The transactional data on chain is on an interbank network that is looking at the actual API calls, it's looking at the values, but not personal identifiable information. And the reason for that is when you have a holistic view of the payment system, you get a better view of risk, you get a better understanding of governance, and it can help prevent a risk to the financial system because you can see like a real-time RTGS, a real-time gross settlement system, you can see in real time what is happening in the financial system.
Excellent. And we have another question in the back there.
Hi, my name is Ralph Kubley. Are you concerned about balance sheet expansion, right? In a world where I have a choice between a digital yuan and a digital pound, depending on where you live, the choice is pretty clear. So there could be some challenges around balance sheet.
So I think there's two questions in there. The first one is, are we concerned about the threat of foreign currency denominated digital money being used in the UK? And then the second one is, what's the size of the Bank of England's balance sheet? On the first one, it's not a first order concern. We've been clear in the consultation paper that we think the prospects of kind of substitution of the pound by a foreign currency, either stable coin, tokenized bank deposit, or perhaps more likely, central bank digital currency is low. But although we think it's a tail risk, it's a risk which is outside of appetite. So were there to be other countries, euro, yen, dollar, that launched a central bank digital currency, that would feature prominently in our assessment. I wouldn't say alone it's enough to take us over the line, but it would be very prominent in an assessment. The second part is the size of the central bank balance sheet. Well, actually, retail money in the current world, cash, is only a small part of the central bank balance sheet. And I think it's important that were we to have a digital pound, we met demand for it, whatever that level of demand might be, because that's important to monetary stability. We have suggested we would, for the early days at least, operate under a series of limits, around 10 to 20,000 pounds per individual holding. We'd need to decide more about corporate holdings in due course. That's more to deal with the kind of unknown quality of this money were we to introduce it, rather than to restrict overall aggregate issuance. So I think in terms of those two things, monetary sovereignty, currency substitution, tail risk, but something that would be outside of our appetite. In terms of the Bank of England balance sheet, just like we do today with cash, we'll meet people's demand for a digital pound, whatever it may be, should we launch one.
And just on the flip side of that, if you have a digital form of money, dollars, pounds, or euros, you can actually have that accepted anywhere in the world. So your bank account can roam for the first time without all the intermediaries for you to do a cross-border transaction or settlement between different businesses across different countries. So having a more versatile form of money to be able to settle directly from your bank account anywhere in the world is going to be an enormous benefit to consumers in terms of cross-border.
Okay, great. There's more questions for the audience, but I did want to take one that has been sent in. What do you see the impact of the digital pound on provision of credit to the economy if the money is held at the central bank?
So we published a discussion paper in 2021, which indicated that we thought the impact was relatively modest. So it was, I think, around 1% on availability and 20 basis points on cost. But we also, and this is really important, and it goes back to my previous point, we also indicated that there is very little information on the behavioural response to something like a digital pound. It's new, and that's exactly why we've proposed the limits in the early days, so we can understand how people might react to it, how people might want to use it. So our view was it's a really important issue. Our modelling suggested it was manageable, but it depended on certain response functions around substituting retail funding for wholesale funding, the availability and cost of wholesale funding. Since then, the interest rate environment has changed quite dramatically. We've rerun that modelling. We've talked to people like UK Finance and the banking sector. They've done their own modelling. And at least from the Bank of England's perspective, I can't talk for the banks, our view is that things have changed somewhat with a change in interest rate environment. So potentially the impacts are slightly bigger because the cost of funding has risen. The wedge might have changed somewhat between wholesale and retail funding. But at the same time, I think in a rising interest rate environment, with an unremunerated digital pound, it means that banking sector paying interest on deposits has quite a large proposition differential there. And actually, in our view, that might somewhat lean against uptake of a digital pound. So you have to look at it in the round. And this is something we'll look to explore a lot more during the design phase over the next couple of years.
Excellent. So we have one more question just right here.
Hi, thanks. Vanessa Cargenian, Fidelity. I just wanted to go back to the point in the question on interoperability and kind of in the sense of, from a technology perspective, where do you think the actual technologies, zero-knowledge proofs, kind of, Polygon supernets, Avalanche subnets, some of the technology aspects that you think will bring about, make policymakers more comfortable with adapting kind of blockchain-based infrastructures?
Yeah. One of the things we did early on was to establish the ISO standard for blockchain. So that was 2015. I led that initiative while in government, in the Australian government at the time. And now there's 57 countries working together on standardizing blockchain as an ISO standard. Since then, there's been a lot of more initiatives in terms of technical interoperability, policy interoperability. I think the industry is working on it. There will be standards, and there already are standards that are being published. But in terms of CBDCs, what we're seeing is mostly going to be private permission chains rather than public, decentralized, permissionless blockchains. So having interoperability in the central bank digital currency context means the interbank network between the central bank and the commercial banks and how they integrate with each other and how they interoperate with each other, and then linking that to the traditional rails.
Okay, I'm afraid we don't have any more time for questions, but I'd just like to thank our panelists today. It was a really interesting discussion, and also thanks to the audience for your questions. But thanks, Tom, thanks, Gilbert. And I invite Liz back up onto the stage, and she's on her way.